All right, everyone, here we are with ticker symbol AEZS, Aeterna Zentaris Inc. And before we jump into this chart, I want to say welcome to all the first-time viewers and investors. Welcome to the channel, Invest for Tomorrow. To all the subscribers, welcome back. And as we jump into this chart, I do want every single investor and viewer to be aware that I have a ticker symbol that I've talked about in the last coming weeks twice already. It's been 2 weeks since we first talked about it. I've talked about it twice. It's already almost 2x. And since it actually started to run last year around November, it's already almost 10x. So stay tuned to the end. I look forward to seeing your guys' responses and comments down below because I have a few questions in the video as well. And I want us to look at the chart together and the potential moving forward. So stay tuned for more information on that. But let's go ahead and dive into this chart first. So it's been pulling downwards, broke through support, and it's kind of hanging out in the middle area, right, from this run, slightly. But it's gotten closer to the 50-day moving average, or you could say that the 50-day moving average has gotten closer to the price. Regardless, they're both meeting up in the middle, and we're now in tug-of-war zone, and I want every single investor to be aware of that. So the 50-day moving average here is 203. If 203 gets broken through, this could be on its way down to newer lows, and it could get closer to the support level, which we're going to talk about in just a moment, and we will end up in bearish territory. Anything above it, right, is bullish territory. Anything below it is bearish territory. We're currently sitting at 211, 214, give or take, for this 30-minute time frame. But right now, what's going on, just based off the chart, is that we're in tug-of-war zone. Now, there's something that would be slightly healthy for the stock. Because remember where it came from. It came from way down here at around 60 cents. And then around $1, it took off. So what would be healthy is for us to see some consolidation within this area. Even if the 50-day moving average slightly ends up above it, as long as it's consolidating and not going sharply downwards and losing all these gains, it would be a healthy sign. Because if you look at it, when it ran up, it consolidated for some time, and it ran up from 60 cents to $1. And before it ran up to almost $4, right, and it hit a peak here of 360, 361, give or take, there was some consolidation. So we want some consolidation here for it to look healthy for the stock overall in the long term and the coming weeks or month or the next catalyst or news in regards to the innovation or the product of this company. Now, let's go ahead and see here our support. Our support level here is 198. If that gets broken through, we definitely are now getting a little bit more deeper into bearish territory. And since all of these candlesticks are pretty bullish, I would go ahead and point out down here around this point as a second point of reference in bearish territory as 176 to see how the stock is reacting. And you can kind of dissect the chart. Now, it's completely optional, but I would use that point beyond 198, 197, give or take, to see how the stock is reacting as it gets closer to 176, and if the bulls are trying to reappear, or are the bears tearing this one down fairly fast. Now, on the other hand, we have our resistance, and that's 234. If 234 gets broken through, the bulls are now maintaining leverage, pulling further away from the 50-day moving average, and working their way up to newer highs and new resistance levels. Now, I do want to emphasize the bulls need to break through that resistance level to reach newer highs and maintain the momentum that they've created in the upward direction, and probably it can start a staircase effect. Now, even though this pulled back slightly, if it does that staircase effect, it would still bring itself up to newer highs. Beyond this volatility here, it could just go ahead and bring itself up to newer resistance levels and newer highs in the chart. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community. And don't forget to hit the like button to let me know you watched this video. Stay tuned to the end because I have a ticker symbol you won't want to miss, and you definitely want to add it to your watch list. So for everyone that has stayed to this point in the video, the ticker symbol I'm about to share with you guys is a reiteration of the previous stock graphs and also where the stock was and where it's at now. So I think this is the second time I talk about this one in less than a month. And I really want every single investor and viewer to be aware of this one, especially the new coming investors and subscribers. I don't want you guys to miss this one. And for every single subscriber that missed it in the previous videos, if you're having the chance to watch it now, I really want you guys to be aware of this company and do your due diligence and do your research and further digging to understand this ticker symbol and the potential moving forward. So the ticker symbol is CLNE, right? So let's go ahead and pick it up here. Let's see if it pops up. Clean Energy Fuels Corporation. Now, in less than a month, it has actually risen, right? From about $10 all the way up to highs here of almost $19. That's almost 100% gain. But let's just go ahead and say it from $10, right? Forget about the $10.45. We talked about it before that. We talked about it right here at $10.998. So $10 to $18.70, that's 87% gain. Okay? And there's so much more room still for this stock. This stock has been growing exponentially over time. I know that when you look at it, you're like, oh, well, there's going to be a point where this is going to drop. Well, we went through one of the massive drops right here after it took off where I was talking about it. This was the first time I went ahead and mentioned it, January 22nd. And I said, okay, we might see it cool off and go a little bit lower. We want to look for some consolidation, and then it can start to hit newer highs. Well, it took off after that, soon after, and it hit 12, came back down to 10, and a lot of investors already saw 12, and they said, okay, 12 is possible. So now we need to get to 12, and we need to break through 12. Well, that certainly happened. It brought itself right back up, slightly above it, brought itself back down to 12, and now it took off to 18. So the question is, could this go ahead and consolidate up here? Could we see this pull back somewhere in the middle of this? That's totally possible and healthy for the way the chart has been acting to this point. I want every single investor to be aware of all these consolidation periods and runs up. These are very healthy signs of a growing stock, okay? So it's clearly showing that. Now you have to do your due diligence and research, because now we're talking about it again at its highest point. We've talked about it at one of its highest points here when it was at 10, and it had recently hit 12, 11 and some change. So it was still showing signs that there could be some room, and analysis ratings were also looking pretty good. So now we've hit new highs. So analysis ratings need to be reiterated and upgraded. And then we also need to see for consolidation or a pullback, but obviously not coming back down to 12, somewhere in the middle. And if it does come back to 12, may it consolidate in 12, and then from there on out, hit newer highs and new resistance levels for this stock to continue this exponential growth. But the potential here going into the year and the coming years is phenomenal, and there's so much room here for this to continue. But from January 22nd till now, 87% growth is pretty phenomenal and interesting to me. So I wanted to go ahead and ask those of you that have found out about this since the first time I talked about it to this point, how have you felt about the graph? Did you add this to your watch list? Have you kept it on your radar? Did you add it to your watch list but disregarded it? All right. I want to ask these questions to you guys. All the viewers coming across this for the first time, I would encourage you to go ahead and do your due diligence and research. And just by looking at the graph, how does it make you feel? Do you see that this can continue to run? Do you see a pullback and consolidation? But the way it's been acting, do you think that this can repeat itself, right? But onto newer highs, like beyond this. So like if we were able to copy and paste this, but starting off at 18, can you see this type of distance and growth getting attached here beyond the next coming months and also year? So I wanted to ask that question to you guys, because that's what you really need to think about when you look at a graph, right? What is it acting like before? And could it repeat that same process moving forward to newer highs and new resistance levels? Obviously, the volatility of the stock market is always going to exist. There's been up and downs throughout this whole process. But if it can continue doing that behavior, there's room here for this to continue to probably 2x from where it is now, because we've almost 2x from where we talked about it in just weeks, and it's actually gone ahead in 9x, right? Almost 10x from way down here, these lows in November. So very interesting stuff. I wanted to ask that to all you guys that are watching, every single investor and viewer. And as always, thank you guys so much for watching, and let's make some money.